Good afternoon, ladies and gentlemen. Welcome to QMI Solutions. Got a great idea what's next? My name's Sam Perkins, and joining me later as our guest speaker is Gerard, who's the CEO and co-founder of RedEye apps. So thank you for coming to us this afternoon. Now, just to acknowledge that this webinar is sponsored by the Department of Science, Information Technology, Innovation and the Arts, and we thank them for bringing us today. Right, the Australian Institute for Commercialisation is a not-for-profit organisation, and we focus on innovation commercialisation. We help companies and research organisations collaborate among themselves and with each other. We run the Queensland Inventor Service, and we also run the Ideas to Market seminars, one-day workshops, as well as this webinar, which is part of that. We run workshops on business model innovation, and we also run innovation clinics where we bring together groups of people focused around a problem that is specific to an industry. Now let's move on to today's session. Aha, I've got a good idea. So what do you do when you have a good idea? What's the next steps that you take? Well, lots of people get lots of ideas. So the first thing you need to do is you need to have a method for screening them and investigating them. And up here I've driven a model that we refer to. So you have lots of ideas at the beginning. You need to screen them, just jot them down a piece of paper, sort through them, think about them. Some of the ideas mightn't be any good. You might kill them off at that stage. Some of them you might be able to change slightly and recycle them and put them back into the process. But once you've done a quick screening of them, then you need to take your best ideas and actually investigate the feasibility of them. So you need to systematically look at market and things like that, what the potential is to generate revenue, etc., etc. And that's what we'll investigate the next couple of slides. Once you've conducted your feasibility assessment, then you actually need to develop your product or your service and actually prototype it and test it out with customers. And then last but not least, you need to launch it onto the market and market it and advertise it. So let's go to the first part of the process. You need to screen your ideas, some way of jotting down bits of information, gathering them all together and picking out the key features. And then you need to work through each one. Now the reason for that is otherwise you could be wasting precious time and money working on an idea that might actually be turned out of little value. So go through your best ideas and just screen them quickly. Then you need to look at the feasibility, and you need to cover off all of these ideas. You need to look at the market. You need to look at whether your idea is technically feasible. You need to think about intellectual property. And you also need to think about the people and equipment you require to actually get this thing on the market. Everybody thinks about the finance, but a lot of people forget the last point, which is, are there any legal or regulatory issues you have to face? For example, are there requirements about the safety of the new product? There's also requirements about quality and so on. Is it safe to use? These are the sorts of things that you need to consider at the beginning. So going into your feasibility assessment in a bit more detail, what do I mean by market analysis? You need to focus down on who is going to want to buy your product or service. You need to think about your competitors. Although your idea might be new, are there other people who are solving the same problem or meeting the same market need in a different way to you? They're your competitors. You need to think about how difficult it is to get this product or service on the market. Do you need a lot of capital? Is the market dominated by large companies who prevent others getting in? These are the sorts of entry barriers that might exist that you need to investigate. But also remember, you may not have to face all those problems by yourself. You might be able to partner with somebody that could give you the opportunity, for example, a supplier or somebody in the distribution channel, or somebody who has a complementary product or service that working with that person might give you access to the market and make it easier. Fundamentally though, you need to answer the question, does my product or service satisfy an unmet need in the market? Will people part with good hard cash to buy it? And you also need to think about whether your market is risky for any reason. Think about whether the market is increasing, whether it's decreasing, what the trends are. Are people buying more of these sorts of product services? Are they buying less? So the purpose of this list is to just give you some of the key questions that you need to think about and analyse and go and investigate when you're taking your best ideas through and doing your market analysis. Because in the end, it doesn't matter how wonderful your new product or service is. It comes down to, will the customers buy it? So start with your idea and define it. For example, you've got an idea for a new four-wheel drive accessory product. So the key question that you phrase to begin your market analysis would be, for example, is there a large enough market in Australia to support the development of a four-wheel drive accessory product? One of the questions that the AIC has actually helped an entrepreneur address was whether there was sufficient tourist industry in Cairns to make building a brand new big aquarium viable. And the answer to the question was yes. But first off, when you've got your idea, you need to phrase it in that manner so that you know what you're beginning to investigate. Then go out and do your market research. Usually you start with what we call secondary data sources, which is, these days, Google and the internet. Have a good look to understand what the size of the market is, who's doing what competition, etc. But also remember there's a lot of information available via government publications, via trade associations, and you can go ask other organisations what data they have. But essentially you look at all of that first to get an idea, because that's the easiest information to get hold of. Once you're fairly certain that there is a market opportunity there, you need to go out and talk to potential customers, what we call primary data sources. So that's go out and ask people. Depending on the size of your potential product or service and the amount of investment it might take to get there, depends on the type of primary data market research you do. So for example, if you were a big company launching a new flavour of chips, you might spend a considerable amount of money getting a market research company to investigate focus groups for you and find out exactly what people do and don't like about the flavour. If you're a small company and you're looking at manufacturing a prototype, you might want to produce some early versions of it and take it out to potential customers, show them and talk to them and find out what they find useful about it. You need to do both types of market research, and the purpose of doing all this is to reduce the risk that you've spent time and money investigating something that won't actually be a profitable product or service for you at the end. The more effort you put into doing your market research and speaking to potential customers and so on, the more it pays off. Okay. Now the key questions that you're trying to answer at the end of this is it possible and practical to take this idea to market? And then, will it be profitable? Now to think about profit, you need to look at what we call the supply chain, which is all the various people and businesses between you and the final customer. For example, the wholesalers, the retailers, and so on. So to do that, particularly for a new idea, new products or service, you really need to think about how they will reach the final customer. How will they reach them physically? How will you deliver it if it's an internet product? You need to try and find out something about the costs that are involved in producing it and getting it on the market, and then you need to look from the other way back and see whether you can actually get enough money from sales, whether the market will support a price to actually make it not only cover the costs but be profitable for each party along that journey. Now the best way to talk about a supply chain is to give you an example. So let's take the wine industry. If you were the grower of the grapes, the vineyard, there are several people between you and the final customer. There's the people who grow the grapes in the supply chain, which may be you. There's the farmer, the winery. In fact, before the farmer, there's the people, the horticulturists, who produce the species of vines and so on that you buy from to plant into the vineyard. There's a place where you collect the grapes, and it might be the winery there that collects the grapes, manufactures a wine. They may send it off to be bottled and packaged by somebody else. Then you've got the wholesaler, the distributor, the reseller, and then finally the customer. Each of the people in this supply chain need to make a margin on what they're doing. So the final cost compared to the original cost of supply can be quite significantly different. if we have a look at the next chart, it gives you an idea of what the costs come from a $20 bottle of wine. So if you were the winery or the grape grower, that's all you would get. $1, around $1 or less of that $20 bottle of wine. So it's important that you spend time investigating the value chain, because you might have a very good idea but then find out that by the time it gets to market, the final retail sale price, there's not enough in it and it won't be profitable. Now moving on. The purpose of your market analysis is to really understand what gives your product or service a competitive advantage over the other ones on the market. So what makes it significantly better value to the customer? And you need to think about this from the customer's point of view, because unless you can persuade, for example, me, that what you're trying to sell me is much better than the one I already have, I'm not going to bother changing and forking out money to buy your product over somebody else's. So you need to be able to say what your competitive advantage is. And you need to be able to explain that to all the people in the value chain, but especially to the customers. Otherwise, people won't bother to change. Now moving on to commercialisation. So you've got a great idea. Now you need to think about how the process, the strategy you're going to apply to get it into the market. Now many people immediately think a startup, but a startup isn't the only way of commercialising your idea. And on the slide that's up there now, we're showing that risk increases on the vertical axis and your control of your product or service, your technology, increases on the horizontal axis. So the quickest way to commercialise something is to sell it or license it to a company that currently does it. So perhaps you've come up with an idea for a simple consumer electronic device. Unless you want to set up manufacturing facilities yourself, you'd probably look to license it to a company that currently does it. And that's a good way of commercialising your product or idea. In Australia, we're very fond of franchising. Other opportunities becoming more formal are joint ventures or strategic alliances. And startup and in-house production you see are on the top right-hand side of the graph. That's because although they give you the most control of getting your product or service on the market, they also mean that you carry the most risk. So just be aware that there are other options than just a startup, and you need to consider what's appropriate for you. Now have a good hard look at your situation, at your appetite for risks and what you're trying to achieve. You need to see what the finance is available and what the stage of development of your product or services will be. And is it the stage and how is it the moment and how far much it has to go before you have something that can be sold on the market. You need to do this thoroughly, and if you're not sure, this is the time to seek professional advice and speak to people, because this is the point where you make a go or no-go decision about this idea, and you may choose to go back and have a look at other commercialisation pathways. If, for example, you don't want to put your house on the line because you have a family to support, and you may have to risk that if you're going and setting up your own startup. So let's move on to strategies that you to look at as ways of launching your product or service on the market. One of the good things to do is to identify new applications for your product or service. Start with smaller, more accessible markets that are easier to get into. Think about using a complementary asset, yours or another company's, and packaging your idea with something else to make a more interesting sellable item to the public. You may wish to actually broaden the offering, so you might have a product and you might want to build something around as an additional service or additional data or an educational aspect, or these days a social media offering to go with it. You could of course collaborate with another company to get something on the market, and people often do that with their suppliers and distributors. Or you could go direct to the customer, and the most common way of doing that now is to sell via the internet. Now I'm going to give you an example of collaborating with another company. Nike, I don't know how many people here are keen joggers, but Nike brought out some jogging shoes that had a little sensor in the bottom that could tell you where you're going, how fast, etc., etc. Now they got together and collaborated with Apple's iPods to be able to produce a product that allowed you, initially the software allowed you to change the tempo of the music that you were playing as you changed the speed at that you were running. That was the original launch, and it's gone on to be much more with that because they've now wrapped an additional, they've broadened their offering and wrapped additional services around it where you can now upload your runs and you can share your paths and your tempo and how well you're going and so on. And for example, you may be training for a half marathon or something with a friend who actually lives in a different town. You're able to upload that data and share that with them. So that's a great way of showing how collaboration can benefit two producers. Benefited both Nike and it benefited the iPod. So moving on. If you've gone through all that process, you've clearly identified your target market and you know who your customers will be. You know your competitive advantage. Now you need to get out there and do your marketing and advertising. The most important thing when you're talking to a customer is to communicate the value proposition, because customers buy benefits, they don't buy technology. So up on the screen I have an example of an iPod. When I look at an iPod, I think, oh, it looks good, I can have all my music with me, it's convenient to carry around, it's easy to use. That's what I as a customer see as the benefit of the iPod. But suppliers and people who are producing things tend to focus on the features. So if one was to look at the features, we'd say that it's a multifunctional device. We could look at the specifications of how much it holds, etc., its weight, its size, and we could look at the warranty. But as a customer, my first choice is to look at the benefits. I might investigate the features later, but that's when I've already made a decision to buy that product. So one of the key points of marketing is to focus on the benefits rather than the features. And we call that communicating the value proposition, which is communicating it to the customer. So for example, customers don't buy V8 engines, they don't buy Holden for that reason, they buy it for speed. They don't buy shock absorbing runners, they actually want to buy running comfort is a benefit to them. And although we like light laptop computers, the real reason we're buying a laptop and the lightest over anything else, the benefit us, is it's easy to carry around and we can work wherever we want. So the focus of your marketing and advertising should be on benefits. Features are still important, but they're not the primary purpose that we seek to buy that particular product or service. So once you've built that, you need to, and you understand what your value proposition to the customer is, you need to create a marketing strategy. Now, you don't need to be an expert marketeer. There's lots of good information online. Have a good look at it. You could ask somebody who you admire who's particularly good at marketing for advice. Keep up to date with the trends. So internet marketing is very good these days. And look around and ask other people in similar positions to you, startup businesses and so on, what they do. And then use their ideas and tips for your own benefit as well. So as part of your marketing and communicating your value proposition to the customer, work out and spend time thinking out your positioning statement, what positions your product in the market. And just to make it useful, we've got a good couple of sentences up there to help you phrase it and understand how to do it. So, for example, I'm developing this new product service. I'm developing a new app that for people who are short of time, who have the problem of have all their information to hand. My product is an app that's easy to use and allows you to have all your reminders there, and that provides instant access, and it's in the cloud so it goes across all your devices. Unlike Fred Blog's app, mine is much easier to use, intuitive, looks good, and is cloud-based. I've just put that together as an example, but that's the sort of things you need to think about phrasing it again. The focus is on benefits and value to the customer. So let's move on to what you do with that. You need to focus on marketing, launching your product. Online, every business needs a website. Google and the internet dominate information, and everybody goes online to find things these days, even if they go into retail store later. So you must be online. You should consider targeting newsletters and other things, perhaps if you produce that to your existing customers, if you want to tell them about your new products or services. But one thing with email marketing is you need to be aware of the Spam Act, or more accurately the Anti-Spam Act, and you need to provide people with the option to opt out of receiving further information. The other thing you should really do if you have existing customers is talk to them and analyse them and see if the ones that are generating most of your income, which platforms they use to find out more about you and about other products and services in the area. You'd be surprised. I had a good chat with a businessman a couple of weeks ago who used YouTube and Facebook, and he had a blog and he had Twitter, and he analysed them all and worked out which ones actually drove business to his website for purchasing, and he just decided to focus on those. Also, don't forget the idea of using low-cost promotional tactics to get your product or service in front of everybody and have them try it. So you could use free samples, sample trials of things. You could have seasonal discounts, free gifts. You could run a competition. You could try sponsoring a community events to get you up there. You could try loyalty programs and so on. Lots of different little tactics, and in fact it's worth Googling to find out some information about all of them. So that's your marketing and your strategy and options. Now, advertising on a budget. As I said, online advertising can be quite effective. Print advertising is still quite effective as well. There are other methods if you're looking at using online, so pay-per-click advertising. You can put it on social media channels. There's particular Facebook pages around your area. You could look at using Google AdWords. If anybody's ever searched for something online, AdWords comes up on the right-hand side and so on. You can look at advertising on existing social media. These are all mechanisms that aren't expensive, as in the days when everybody had to do an expensive radio ad or TV ad. So there are lots of budget-worthy options available. But when it comes down to advertising, what you're advertising essentially is your brand. Hopefully you're going to come up with more products and services to meet the market. So your brand is actually the most important asset of your marketing, and you need to focus on building that and making sure that it's identifiable with you and your products and services. So it is perhaps your most valuable piece of intellectual property. Okay, well that's a quick wrap-up on the sort of what you could do with your idea and a quick step through the various bits. So I'm just going to move on to some of the resources that are available to help you in taking your idea and turning it to a product or service on the market. There's us to start with, the Australian Institute for Commercialisation, and as well as this webinars, we run a lot of these other sorts of things. And there's just a list there for you. There's also the Federal Government's Department of Industry, has a lot of free tools and resources online. They're the people who actually administer the R&D tax incentive, and they also administer various other grants and programs to assist you getting new products and services on the line if you're an entrepreneur. To go into a little more detail, the R&D tax incentive. Now, if you're spending more than $20,000 on research and development activity, then you should be claiming this, because this is an entitlement. A lot of the other support is grants and it's competitive, but this is an entitlement. If you meet the criteria, you get it back. Now the key here is research and development. So it can't simply be incremental product development. There actually has to be a research element in there where you tested, for example, different paint coatings on custom bikes that you're using, and you didn't actually know at the start of that process which particular formulation of paint would, for example, be the most durable. So there has to be a real test or trial carried out as the research component, and you can't actually know what the results of this would be in advance. Now, if, for example, coming back to my paint formulation one, if you tested 4 or 5 different formulations and 3 of them failed, that actually proves that it is research, because you could not have known that happened, and you created new knowledge. You know which ones passed and which ones didn't. So the R&D tax incentive is very good for small businesses, but you must meet the eligible criteria. And you must keep good records, because the Australian Tax Office will come back and investigate. So moving on from that, the Entrepreneurs Infrastructure Program is one that's just been recently relaunched. Now, it doesn't actually give money to your business, but it helps you access other services, and it helps you access and collaborate with the research sector. For example, if you're trying to solve a particular issue for your business. So that's very good to investigate. Again, all of this information is online, you can have a look at. If you're exporting, there are various other systems available which were listed on the Austrade site, such as the Export Market Development Grants, EFIC, and Trade and Investment Queensland also has a lot of useful services. Queensland Government itself has online tools and resources that you can access, and up there is a link for your information, business.queensland.gov.au. Now, Queensland Government also runs the Accelerate Ideas grant, which helps you partner with a public research organisation to solve a problem. But as with most grants, you have to provide matching funding. So you have to provide your own cash and the government provides the other half. Amounts of between 25 and 50 grand are available, and it has to meet certain criteria. Again, these are competitive grants. Now lastly, the most important part of taking your idea to market is the personal ones. Now, entrepreneurs need to have all these things. They need to be tenacious, they need to be courageous, they need to be prepared to keep going when it's all tough, and to try because they believe in what they're doing and they believe in getting it out there. Now, on that note, I would like to introduce Wayne Gerard, who's the CEO and co-founder of RedEye Apps, and is a great example of those qualities of entrepreneurship, and he will tell you his story. Okay, passing over to you now, Wayne.
G'day, Sam, and g'day everyone. Thanks for the opportunity to have a chat. With you guys today. I'm just getting my screen turned on. Rightio. Sam, there was some really great content in the slides you covered, and certainly that last slide got me thinking about some of the characteristics that I've had to, I guess, demonstrate or develop over the last couple of years. I was thinking about the breaking the rules one and how many times I've broken the rules recently, and I'll share a little story to get started with you guys. 2013, we were lucky enough to secure a really large contract with a large oil and gas company. And talking about breaking the rules, I went and got a couple of banners made and stuck the banners in the foyer of their building, a very prominent building in Brisbane, saying that we were starting a project with them and giving them information about where to go to find out more about our project. Those banners lasted 3 days in the foyer, and there just happened to be a whole bunch of other businesses working in that building as well. So it was a bit of breaking the rules and trying to get our brand out there. Anyway, ladies and gentlemen, my name is Wayne Gerard. I'm the co-founder and CEO of a company called RedEye Apps. Very quickly, a bit about me. I've been an entrepreneur for a long time, 20-odd years, basically. Kind of just one of those people that likes to start things and grow things and likes to solve problems. So my contact details are there. Please feel free to reach out to me as a result of today. If I can help you on your journey in any way, I'm more than happy to do that. Let's get into what I do and a little bit about the story and where I've where we're at today. I run a company called RedEye Apps. RedEye Apps is a software as a service company that writes software for the enterprise level asset owners. Our solution is an engineering drawing management solution, and we sell that to mining companies, oil and gas companies, governments, utilities, facilities managers, large companies, both here and in the US. We started RedEye in 2012. We actually came up with the idea for RedEye in the middle of 2011. And so this first slide is really about where I started as an entrepreneur. I guess for me, I always wanted to start a software as a service business, and I was looking at what was the right problem to solve. I'm lucky enough to have an engineering company as well, and we were literally sitting on site at a coal mine in North Queensland and doing our engineering work, and we kept on getting issued the wrong set of engineering drawings. And for anyone that's ever worked with engineering drawings, it's a pretty common challenge in the market to find the right version of a drawing and to make sure that everyone's working off the right version, and to do that in a way that's cost effective, quick, and allows the business to operate effectively. So we sat there, and after getting issued the wrong set of drawings a bunch of times, we basically said, this is ridiculous. It's adding risk to the projects we're working on, it's delaying them, it's adding cost, it's frustrating people, and there's also a safety element to trying to do work where you have the wrong information. And so we said, right, we've really got to fix this problem, not just for our own people and our own frustration, also for our client. And so we went looking to identify solutions that were on the market, because we thought to ourselves, surely this document control for engineering drawings isn't rocket science. Someone's got to fix this problem. And we basically went and spoke to everyone that we knew in the market and asked them, what system do you use to manage your engineering drawings? And they told us, and there was a whole bunch of them, and most of them were really large document control or project management solutions that costed many millions of dollars. And we said, so do you still have problems finding the right version of the drawing? Do you still have problems sharing and working on that drawing effectively with other people, both inside your organisation, and do you have challenges giving access to that drawing to people outside your business? To which most people said yes. And so we looked at how people, the solutions that people have built and what they were designed to do and what people were trying to make them do. And we pretty much realised that there was no solution that was purpose-built for solving the problem of engineering drawing management from an asset owner's perspective. Most of the solutions on the market were designed for engineering or construction companies, and designed for those companies to deliver engineering and construction projects at that particular phase in the asset's life cycle. Where an asset owner wants to manage their asset or their assets from the concept phase all the way through the design, construction, commissioning, operational as-built phase, as it's called, through upgrades, and also potentially into asset sales or retirement. And so we said, right, there's a great opportunity here for us to build a solution that's purpose-built to solve that problem. It was also the right time to build that solution in the cloud. And so from a development perspective, from a financial perspective, and from a collaboration perspective, there were a lot of benefits to moving to the cloud, and most people are familiar with why the cloud's valuable, or why the cloud will become the prominent way to deliver IT services in the future. So we basically decided to go ahead and create a solution, and ultimately a company which we call RedEye. What that brings me to is something that in hindsight, I sat down and worked out, how did I identify this problem and what's the right kind of problem to solve? And I basically came up with three things, and I think these three things are really fundamental takeaways for any person that wants to go and build a solution or create a company to go and service a client base. For me, the first thing is, if you're going to go and create a solution, you really need to create a solution that solves a very expensive problem for your clients. So if you're in the market now and you've got some ideas about what you could be doing, what business you could set up, what product you could develop, maybe one of the things that you could use to filter the idea and evaluate whether or not it's the right idea to pursue is ask yourself, how expensive is the problem that my solution solves? Is that problem really painful? Is that problem create a lot of risk? Does that problem create a lot of time delays, or does it add a lot of cost to my client's or potential client's business? And if the answer to that is yes, then you pass my first filter. My second filter these days is a filter that relates to understanding your market and your competition. And so for me, I didn't want to go and build a company where I was competing head-to-head with large global multinational companies that had, that were worth hundreds of millions and billions of dollars, and had the marketing budget and the product development budget and the sales force and all those capacities to just trample us in the market. It didn't make sense for me to compete head-to-head with those guys. So when I look at what solution to go and focus on, I always look at, is the solution that I'm trying to provide a solution that, if other people are already delivering it, is it non-core? So is it not part of my competitors' core business? Because most people that have worked for large companies know really well that a large company invests its time and energy and focus into a small section of its product offering or a small segment of its market. And often the company has much broader solutions or much broader product offerings that they don't invest in as much as they should. And so if you're competing with their core product, obviously they're going to throw more resources at the markets that you're competing in, and that'll be harder for you to get traction. Where if you're competing with a product that a large business offers that's not really core to their business, often those products are underfunded, under-resourced, and late to innovate. So it's easier to come into the market with a new product that is innovative and is relevant and stand out even against really large companies. So my second, I guess, filter is saying never, when I look at what products I'm going to sell or create, I try to make sure that I don't build something that the competitive set is focusing on as a core product. The third aspect of, I guess, my filter on how to identify a great business opportunity is a pretty straightforward one when it's all said and done. And so the third one's all about funding. Can you afford to get what you need to get to market in a time frame that's quick enough to gain traction in the client base that will allow you to test that your product's right, and that will allow you to demonstrate to other potential clients that you're a viable alternative solution to the products that are on the market. And to do that, you have to have enough funding. So 3 filters to identifying a great business opportunity. First one is make sure that you're solving an expensive problem. Second one is make sure that you're not competing with really large companies' core business. And the third one is make sure that you understand and you can fund it to get it to market enough to create some kind of brand. Let me forward on here. A little bit about our business, just quickly. So we're the first fully cloud-based and purpose-built solution on the market for engineering drawing management. And Sam talked a lot about not selling features, rather selling benefits. And you can see there that when we position with our clients, we position around the benefits we offer. And that is organising our clients' drawings, getting them all in one place and making them really easy to work with. The second one is around making sure that our clients have the ability to do the things that they want to do in a really easy way. And the third one is around effectively sharing those drawings and managing and maintaining their IP. So for our clients, those benefits are fairly substantial benefits, and they can't achieve them even if they invest in solutions that cost many millions of dollars. So that quite quickly differentiates us. A little bit about our timeline. We came up with the idea in 2011. We did the research. It took us 4 months of face-to-face meetings, detailed market research, just like Sam was talking about in her slides, and before we decided to build, to go ahead and build a solution. We then went and hired a software team, a couple of people. We did that locally, and they started work in the beginning of January 2012. 2012, we built out our product and got our first client, which was one of BHP's coal mines. 2013, we got our second client, which was Arrow Energy, so into the oil and gas sector, and you can see that we've expanded into the US this year. So I spent 4 months full-time in the US earlier this year looking at does our solution make sense to the US market? So do we have what's called product market fit, and in what sectors, and where should we set up? And so we bit the bullet and employed someone in Houston and set up our office there in June this year. Lucky enough to win our first major contract in Houston in September this year, and are planning to scale the business over there and in Australia next year. From my perspective, one of the most important things you can do as an entrepreneur is get very, very clear around what it is you're promising your clients. We call that a brand promise, and that's a pretty simple term. And so for us, our brand promise is 3 things. we're easy, we're fast, and we're relevant. And if we can do all those things, we'll become essential. So when we think about our brand promise as being easy plus fast plus relevant, we relate that both to our business and into our solution. So our solution needs to be easy to use. It needs to be easy to find the right drawings in. It needs to be easy to configure. It needs to be easy for us to bring new clients onto. At the same time, our business needs to be easy to deal with. Our team need to be easy to deal with. We need to be, the whole way we do business just needs to be easy. And then we apply the same principles to the other two aspects of our brand promise, being fast and relevant. So our goal is to become essential, because as a software as a service solution, if we become essential, that means that our monthly recurring revenue will continue to grow and grow and grow and grow over time. So we want to make sure that our solution is essential for our clients, so we're going to constantly add value to and develop out our solution so that they keep on using us. We're in an age, I think, where people don't want to sign long-term contracts. No one likes signing a 2-year contract to get a new phone at Telstra, and most people don't like having to sign up for long-term contracts for any service or product that's being developed these days. So really it's up to us as entrepreneurs to constantly innovate and offer more value through our products and our services to our clients so that they want to keep using us. And so that's an important part of our brand promise. The other important part about taking a great idea and turning it into a business, from my perspective, is really understanding how you are going to get the most out of the business that you build. And in order to get the most out of the business that you build, my way of thinking is that you have to create the best place for your people to work. And so culture is an incredibly important part of what I spend my time working on and developing, and it has huge returns for the productivity and the enjoyment and the effort that our people put in, and that has a direct return for the value of the solution that our clients get to use. So for me, culture is the thing that underpins our ability to deliver our brand promise, and that allows us to become essential for our clients. So, a lot of companies talk culture. I think the companies that are growing the fastest today are the ones that actually practice the things they talk about as it relates to culture. The thing that underpins our culture, and the thing that we try to incorporate into every person's job here at RedEye and into our recruitment process and into our daily language, is this concept of personal responsibility. And you can see an extract there that comes out of a document that we have, which is called our Paint a Picture. So we have a little document which we hand out to everyone that applies for a role at RedEye, and it talks about what we are as an organisation, where we're going, what we're trying to achieve, how we're going to achieve that, and what it's like working inside our organisation. We take that into our recruiting process as well. And just quickly on our recruiting process, so we started in January 2012 with 2 software developers and myself and my co-founder. We're now 12 people, and we're on track to basically become 50 people by the end of next year. So we're recruiting right now 10 people, and with a view that those 10 people will join the business on the 5th of January, and we'll go through quite an explosive growth both here and internationally. To do that, we need to make sure that we are really, really careful about the type of person that we bring into the business. And so there's a great saying that, I can't remember who said it, but it just sticks with me all the time, and that is that hire for fit and train for skill. So we always try and hire people that are the right fit for our culture, and obviously they have to have the base skills, though they don't have to be the best person in the world, because as far as skills go, because we will invest in them. So for us, bringing people into the team and making sure that those people understand that the cool part of working at RedEye is this aspect called personal responsibility. Everyone on our business has an area of responsibility, right down to our software developers, where everyone owns a component of our solution. As part of our process to employ people, we basically go through we post a job ad, we receive both their CV and a cover letter. If people don't write a cover letter, we instantly don't consider them. We then do phone interviews with the shortlisted people, and that's really driven by the person that's responsible for the role that's being hired. They then shortlist from there, and I do an interview, either face-to-face or phone, with the people that they've shortlisted. And then from that shortlist, we bring people to a round-table meeting with every person on our team. And so the team sits down with a potential employee, and the team gets to ask the employee, the potential employee, about their skills and their attitude and how they handle situations. And we then, the potential employee then gets to ask everyone on our team, what's it like working at RedEye? We then talk about what's expected of the person that's going to join, and everyone gets to share in that conversation. And then that person steps out of the room essentially, and we as a team then talk about how did they go, what, do they have the right cultural fit, do they have the right technical or functional capabilities, and what would each person on our team have to do to ensure that that person was onboarded quickly and effectively so that they could become an effective member of our team. And each person in my team, we go around the table, they explain, for this person to join us, this is what they're going to do to help that person become successful. We write all that stuff down, and that becomes the basis of the onboarding plan for the new employee. The reason we do it like that is because I want every person on my team to feel responsible for helping the new person to become successful, and the new person gets a really good sense of the culture that they're walking into. And so for me, that process, while there is a cost associated to it, unquestionably. There's an amount of time and energy that's taken up doing that. It's meant so far that we've had a really, really good batting average when it comes to employees. And I regularly get feedback from our clients about the speed that our employees follow up, about the care that they take when they do things, about the energy and effort that they put into helping the clients out and going above and beyond. And so developing the right culture from the get-go, for me, is one of the best investments and the most, in reality, the cheapest investments in being able to take a great idea and turning it into a great company. So how do you fund growth? Funding growth is one of the biggest challenges and most important aspects of growing a business. Having a technology startup like RedEye, we pretty much realised that the problem we're solving is relevant across many market sectors. So we've had inquiries from people in property development, in defence, in mining, in oil and gas, in government, in healthcare, in a whole bunch of different sectors. And we've had inquiries from people all over the world. And literally, we've had inquiries from Peru and China and Hong Kong and Africa and the US and Canada. And so we realised really quickly that we couldn't fund RedEye, the growth of RedEye ourselves. So we had to work out how do we scale our business effectively. And Sam had a good slide up that talked about the different stages of growth. And this funding chart really talks about the funding that you need to have to match each stage of your growth. And so when you're coming up with the idea and filtering that out, you need to spend time and money going and talking to clients, doing market research. And so you need some kind of seed funding to be able to do that. Once you've worked out that your idea is the right idea and you want to try and take that idea and turn it into an initial product, often called a minimum viable product if you're a fan of the lean startup kind of practice. So you need some funding to be able to create a minimum viable product. There's a lot of talk on the market at the moment about the fact that it costs a lot less these days to build up a minimum viable product than it did, say, 5 or 10 years ago. Because there's so much access to cloud-based infrastructure and software that you can reuse in your own software, so open source software and all those kind of things, because you can get access to people using services like Odesk and Freelancer that work offshore at far reduced rates to what you'd have to pay here. You can actually get a minimum viable product up pretty quickly if you really understand the product and you understand where to get the components from at a cost-effective price. Minimum viable product and seed funding are often funded from friends, families and fools, as it's said, or there are a bunch of great government grants and services that you can tap into, and Sam talked about a couple of those as well. I really recommend tapping into the government grants and services. For example, we're huge fans of the Export Market Development Grant. That's helped us to expand overseas way quicker than we could have done if we had to fund it all by ourselves. Keeping great records right from the beginning and making sure that you're structured well so that you can take advantage of the research and development tax incentive is absolutely critical. In our first year, we actually didn't establish a proprietary limited company until 9 months into the process, and in hindsight that was a mistake because we couldn't claim the R&D effort that we'd done prior to that. So really, establishing a proprietary limited company up front and keeping great records so that you can claim the R&D tax incentive from the beginning is something in hindsight I wish I'd done. Looking at how do you scale from minimal viable product up to a commercialising or really building some market traction. For me, we did that by selling, by getting early clients. And there's a lot of work to be done to make sure that your pricing model, your commercial terms and conditions are relevant to your market, and that you're marketing yourself early enough in really cost-effective ways so that people actually come to you and say, hey, yeah, we'd like to trial your product. To give you an example, we took our prototype of RedEye to the Mine Electrical Safety Conference in June 2012, and we got our first client in November 2012. So we had to carry the business ourselves, funding it ourselves from January through till we got our first revenue in the bank, which was really January 2013. And that's quite expensive to do if you have to employ a bunch of people or you have to do prototypes of physical products or services, that kind of thing. So commercialisation funding is a core to success. The new Commercialisation Australia grant that's I think just been recently announced, Sam, you'd have more detail on that, is definitely worth looking into. I'm sure it's a co-contribution kind of funding, yet it could essentially halve the cost of the money that you have to find yourself. So very, very effective way to help you get to a commercialised solution. Right now we're looking at growth funding and we're going through venture capital funding. So the venture capital community is a really interesting experience for a startup. I've spent a fair amount of time in Silicon Valley and Austin, Texas, and Boulder, Colorado, and New York, and here in Australia talking to the venture capital community, demonstrating RedEye, pitching our business plan, and we're lucky enough to have found a venture capital company that really understands our market and understands our solution and has a great fit for us. And so we're in the process right now of finalising our first round of institutional investment, and that will help us scale the business substantially over the next essentially 4 years. And so growth funding is often the first level of institutional investment, and something that people often, in my experience, people often try to raise money from angel investors or growth or venture capital companies probably too early in the process, and there's still not a great deal of that kind of funding available for early stage ideas or pre-revenue companies here in Australia. And we all hear lots of stories about Facebook being funded with $15 million and that kind of thing when it's still an idea. The reality is that it's a very small percentage of companies that actually end up in Silicon Valley funded prior to having revenue. So getting revenue from your clients, getting revenue from the grants that are available from the government here in Australia is a great way to commercialise your business. Once you've got some track record, then growth funding is a great way to help you accelerate your growth. And so for me, that's all about how do we decrease the time it takes to sell RedEye, how do we take RedEye and make it relevant to different market segments and different geographies globally, and how do we crystallise our position by building out our technology roadmap to further differentiate us from our competitive set. Ultimately, the ideal position for any company is to become the market leader, and if you can become number 1 or number 2 in your category globally, then the opportunity to become a multi-billion-dollar business, if you're in the right category, is very realistic. It's a hugely ambitious goal, and what's interesting is that today more and more entrepreneurs that I speak to a bunch of entrepreneurs in various ecosystems or entrepreneurial communities here in Australia and overseas. And a couple of years ago, people were talking about how they want to become a $100 million company. And now people are talking about how they're going to build the next billion-dollar company or multi-billion-dollar company. And so the competition is stiff. And if you're able to become the market leader, number 1 or number 2 in a market, then it's really quite achievable to list a tech company on the stock exchange, and either here or in the US, and become the next Google or Facebook or Apple or whatever it is. So heaps of funding options are required as you grow your business. I hope that gives you an overview of my business and a bit about me and a bit about my experiences. I'd be happy to help or take any questions either now or after this. So Sam, how about we go back over to you?
Thank you very much for that summary, Wayne. If I was just to sum up the key points you delivered there, it's about understanding your customer, your competition, your finance, your brand, and your team. Now, I've got one question from Tim, and he's listened to what you've said today, and his question was, what's the one big tip you'd give to somebody starting out? Over to you, Wayne.
Hey Tim, thanks for your question. One big tip that I'd give anyone that's starting out today is to really think about what's the problem you're going to solve. How important is that problem to your clients, and are they prepared to pay for it? So if you can answer that question, then you're well on your way to being able to build something that people will buy. And the more people that buy it, the easier it will be to get funding for it, the easier it will be to scale it, the easier it will be to have options around how you want to realise value from that down the track. Over to you, Sam.
Okay, thank you, Wayne. Another question that we've been asked. Do you have concern about disclosure of your ideas in terms of competitor taking it to the market more quickly than you could do it? So when you were starting out, was that an issue for you? Over to you, Wayne.
Thanks, Sam. Hey, that's a great question. Look, originally I struggled a lot with sharing my IP and worrying about who would take it and do something with it. There are a couple of things that I've learned over the last couple of years that make me less worried about that today. The first thing is, if you back yourself as an entrepreneur and if you're prepared to, you think back to Sam's last slide around the attributes and characteristics of an entrepreneur, those things are really the things that determine whether a business will be successful or not. Your idea, that's a ticket to the game, but it is not the determining force around whether or not you'll be able to execute or become create an effective business. And so in my experience, there are hundreds of great ideas, and there are hundreds of great ideas that are just 1 or 2 degrees different from many other ideas. What really differentiates is how committed you are, how persistent you are, how focused you are on taking that idea and actually doing something with it. And so, I actually went and met with one of our biggest competitors is a very large, I'm talking $600 million business, right? So we're a little startup in Australia, in Brisbane. Last year we did just under $1 million, right, in revenue. This company does $600 million a year, has thousands of people, and I went and met with them and I talked to them about who we are and where we're going and what we're trying to achieve, and I asked them about what they're doing for the product that they offer that we were competing with. And to this day, they still haven't come to the market with a viable alternative to what we're offering. So we're still winning business off their clients. They know we're winning business off their clients. They know what we're doing and how we're doing it and where we're going, and we're still winning business off their clients.
All right, thank you very much for that answer, Wayne. Yep, thank you very much. It's 1:30. I'm going to wrap it up now. Thank you, ladies and gentlemen, for joining us at our webinar today, and we look forward to participating in the next one. Thank you very much. Goodbye.